and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. All three major U.S. indexes swung between red and green early Tuesday morning, but hovered down over 1% through late morning trading. The downturn comes as Wall Street assesses how to react to the spreading of the coronavirus outside of China, particularly as more cases pop up in South Korea, Italy, and Iran. Tuesday followed a rough Monday that saw the Dow fall over 1,000 points to record its largest one-day drop since February of 2018. The fall wiped away all of the blue chip index's 2020 gains. The S&P 500's drop Monday also saw it go into the red for the year, and the Nasdaq is quickly heading that way Tuesday. As one would assume, the yield in the 10-year U.S. Treasury note fell near its lowest point ever on Monday and is down once again to 1.32%. Meanwhile, gold prices hit yet another 7-year high Tuesday as investors dive into the safe haven assets. Looking back, Apple flashed a warning sign last week when it said that it would likely fall short of its quarterly revenue estimates because of downturns in production and demand in China. Since then, Royal Caribbean, Procter & Gamble, and then on Monday, MasterCard said they are likely to be hurt by the impact of the coronavirus outbreak. This helps highlight how much more important China is to the global economy than it was during the SARS outbreak of the early 2000s. With that said, the virus is showing signs of slowing down in China, in the epicenter, even as it spreads in other key economies such as South Korea. The total death toll has now topped 2,700, but many economists and analysts have noted that the fear impacted the global economy far more than the actual novel coronavirus. Investors might also be pleased to note that China has committed to new efforts to support local businesses and the economy amid travel restrictions, manufacturing halts, store closures, and more. On the earnings front, Home Depot stock climbed as high as 1.8% in morning trading Tuesday after it topped our Q4 earnings and sales estimates. Meanwhile, Shake Shack stock tumbled 13% Tuesday as the hamburger chain's same-store sales struggle once again. Investors should also note that HP said Monday that it would buy back roughly $15 billion worth of stock in an effort to fight back against Xerox's hostile takeover bid. Looking ahead, Macy's is set to report its quarterly results after the closing bell Tuesday, with Square, Lowe's, TJX, and others all set to report Wednesday. And Salesforce is likely to draw a lot of attention after the closing bell today. CRM stock was up nearly 20% in 2020 until it began to fall during the recent market pullback. Our Zacks estimates call for CRM's fourth quarter sales to pop 32% to $4.75 billion, which would roughly match Q3's top-line growth. Salesforce adjusted Q4 earnings are projected to sink over 21% to 55 cents per share as its Tableau acquisition weighs on earnings. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 strong buy stock.
For today's tech tip, we will be exploring the Zacks Style Scores system, a proprietary rating system that highlights key fundamental metrics. Pull up any ticker page on Zacks.com and click the Style Scores icon. From here, you will be able to compare the stock's most important value, growth, and momentum ratings with those of its industry rivals and broader group averages. Have a question about using Zacks.com? Send us an email and we might answer it next.
Hello and welcome back to Free Lunch. Today we're breaking down why SolarEdge Technologies is a Zacks Rank #1 strong buy stock. SolarEdge, as you might have guessed, is a solar energy firm that has continued to hit new highs in 2020. SolarEdge's DC optimized inverters look to maximize power generation, and its total revenue surged 52% in 2019. Plus, the U.S. Energy Information Administration forecasts that the generation of non-hydropower renewable energy sources, such as solar and wind, will grow by 15% in 2020. This would mark the fastest rate in 4 years, while coal-fired power plant generation is expected to decline by 13%. So let's dive right into SolarEdge. As I mentioned, the company is a solar energy company. You can dive more into it if you want to know, but that's the gist. We're not going to do too much more than that, and they're trying to optimize that solar generated power, which is going to be vital going forward to be able to get more energy from those solar panels. And now we're going to go ahead and take a look at some of its stock price movement. As we mentioned, the company's been on a big run in 2020. It hit new highs, but then it's fallen as part of that recent market pullback. It posted stronger than expected Q4 sales just last week, or on February 19th, so last week, yeah. So it was up big, and it's fallen a bit. And we can see that over the last year, the stock's up over 230%, and we'll go over the last 3 years just to give a better sense of what's going on. So we can see that SEDG, which is SolarEdge's ticker, is up 800% over the last 3 years. That blows away that alternative energy market. And we'll put this against, the S&P 500 just to give people a better sense. So S&P 500 is up 37%. SolarEdge is really just blowing away everyone. And we can see that it's consistently beat its sales estimates. I have these green as sales estimates. Normally when I do this screen, it's as earnings estimates, but it's more important for the company to be beating on the top line when it's this big growth company like that. And then we'll also take a look at the company's valuation in terms of forward sales, which has become a little bit stretched as it blows away its latest earnings results, and the stock's sitting right near new highs, but it's still not trading that far above the S&P 500's average in terms of forward 12-month sales, which might be pretty shocking for some people when you consider that the stock is up so big and it's in a growth industry such as solar energy. So now we're going to go ahead and take a look at some of the company's growth over the last couple of years. So as we mentioned, they grew 52% in 2019. They grew 54% the year before that, and about 24% the year before that. So the last couple of years were really big. So this puts things into perspective when we're going to go ahead and take a look at what to expect going forward. So right now, our estimates are calling for about 59% growth in Q1 of fiscal 2020 and 100% growth on the bottom line from 64 cents per share a year ago to $1.28 per share this quarter. And then overall, we're calling for about 32% top line growth to $1.9 billion, and then about 27% growth on the bottom line, and then another solid 16% growth and 16.6% growth we're calling for in fiscal 2021. We can see that since they reported, those earnings estimate revisions have trended heavily in the right direction, and we can see that they've jumped from $5.10 per share to $5.64 per share for that current year, which is now 2020, and then from $5.75 to $6.57 for fiscal 2021. And we can also see that they've beat the bottom line estimates, our bottom line estimates, over the trailing 4 quarters as well. So the company, after posting 2 straight years of 50% or higher growth, is expected to post 32% top line growth this year, which is a continuation of really impressive growth for a company that in the long run is operating a business that seems like it's going to be more and more valuable as we all sort of go away from fossil fuels in the next maybe 100 years. So maybe this is a really, really long-term investment, but they're also making a lot of money now, and they're expected to then jump all the way up to $2.2 billion in 2021. So we're going to close with the fact that the solar industry that it's in right now also sits in the top 16% of our more than 250 Zacks industries. It has an A grade for growth, a B for momentum, and it has a D for value, but we noted that in terms of that forward 12-month price to sales, that it's trading at not too much of a stretch valuation compared to the S&P 500, which is pretty solid for a growth company like this, especially if you have a really bullish take on the solar energy industry in the long run. And that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Make sure to also check out our Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.